Welcome to today's market report.
European stocks fell on Friday on nervousness around the Omicron COVID-19 variant, while US inflation reading coming in broadly in line with expectations did little to allay uncertainty around US monetary policy. The pan-European stock 600 slipped 0.3%, down for a third straight session on worries that measures to curb the spread of the Omicron coronavirus variant could hit economic recovery. But a strong two-day gain at the beginning of the week saw the index post best weekly gain since March, up 2.8%. Data on Friday showed US annual consumer prices rose further to 6.8%, the biggest year-on-year rise since June 1982, and followed a 6.2% advance in October. It looks to be a settled end to the week as stocks pause for breath following the big gains in the first half of the week. According to IG, US CPI came in line with expectations, but prices continue to rise, meaning that while the pressure on the Fed to raise rates hasn't increased much as a result of today's data, it doesn't really lessen it either. On the contrary, news that the European Central Bank is widely considering a temporary increase to its bond purchase plan at a policy meeting next week was seen as a dovish step. Technology and retail were the top decliners in Europe on Friday. We think the path for equities is lower over the next 12 months, according to Bank of America. Real bond yields will come up from record lows as the Fed turns more hawkish and the market starts to price in a sharper than expected Fed hiking cycle. Auto stocks were led higher by Daimler AG, which rose 2.9% after spin-off Daimler Truck climbed in its market debut on the Frankfurt Stock Exchange. Gains for the sector came even as data showed China's auto sales dropped 0.1% in November, marking their seventh consecutive monthly fall as a prolonged global shortage of semiconductors disrupted production. Tobacco group Swedish Match jumped 7.2% after the Wall Street Journal reported that US Democrats dropped a proposed vaping tax that would have taxed e-cigarettes like regular ones. Food delivery companies Deliveroo and Just Eat Takeaway slipped 2.4% and 3.2% respectively, adding to losses in the past week on worries that a European Commission ruling on gig economy drivers would hurt profits. Polish fashion retailer LPP jumped 10.2% to hit a fresh record high, extending Thursday's rally after strong third quarter results. Oil prices rose slightly on Friday and posted their biggest weekly gain since late August, with market sentiment buoyed by easing concerns over the Omicron coronavirus variant's impact on global economic growth and fuel demand. The Brent and US WTI crude benchmarks each posted gains of about 8% this week, their first weekly gain in 7 even after a brief bout of profit-taking. Brent settled up 1% at $75.15 per barrel. WTI rose 1% to $71.67 per barrel. US gold futures most active contract December settled Friday's trade up $8.1 or 0.5% at $1,784.80 per ounce, rose 0.1% for the week. The British pound is barely flat, trading at 132.30, while the weighted US inflation figures were released, spurring a jump in US equity markets, despite the downbeat market sentiment in the Asia and European session. The high reading of the CPI emphasized the posture adopted by the Federal Reserve. In the last week, Fed's policymakers expressed the need to increase the QE's reduction speed so that the central bank could have room to act as needed. Also on Monday of the last week, Fed's Chairman Powell pivot from a dovish stance to a hawkish one as he reiterated that inflation is no longer transitory, and he coincides with Fed's Bullard, Bostic Daily, among others, that a faster bond taper is required. In the meantime, after shrugging off the initial reaction to the inflation report, US T-bond yields extend their fall, and the US dollar index slides 0.1% down to 96.16. Eurodollar climbs 0.14%, trading at 113.10 during the New York session. The 1-hour chart depicts the Eurodollar pair faded the upward move around 113.24 area near the November 26 high.
This is today's market news. Thanks for listening. We'll see you next time.